All right, so here's the deal. We've got a situation developing that no one's really talking about. And I don't know if this is going to work out or if I'm completely wrong here, but something's not adding up. And when things don't add up, that's usually where their opportunity could be or where you lose a lot of money. So if you like the idea, hit that like button. Helps the algorithm, helps me know I'm not just talking to a wall here. Subscribe if you want more of this. And if you want access to our community, where we actually break down the best idea of the day, it's $25 at stockscommunity.com for 7 days. Plus, if you want the transcript of this, head to free.stockscommunity.com. Links in the description. You can sign up for that newsletter. Not financial advice, do your own research. You know the drill. All right, let's get into it. So everyone's focused on NVIDIA right now, as they should be. Everyone's watching the AI infrastructure names. Makes sense. TSM, AMD, Broadcom, all the usual suspects. Fair enough. But here's what's weird. There's this entire computing technology that's been around for years, right? And it's always been 5 years away from being useful. Always. For like 20 years, it's been 5 years away. But something changed in Q4 2025. And I don't know if anyone noticed because everyone was so focused on the obvious stuff, but commercial contracts started happening, real contracts, not research partnerships, not we're going to study this technology, actual deployments with actual revenue. And the stock's been moving weird, not like pumping crazy or anything, just different than its peers. And when something moves different, I pay attention. So let me walk you through what I'm seeing here, because either this is early on something real or I'm completely missing something obvious. Probably 50-50, honestly, but here's the setup. You've got $4.7 trillion about to flood into the economy over the next 9 months. Tax refunds, corporate repatriation, all that stuff we've talked about. And everyone's like, oh, that money goes to NVIDIA. That money goes to data centers. Sure, but what if there's a technology that solves problems NVIDIA can't? What if there's a computing paradigm that's actually commercially viable now? Not in 5 years, now. And what if nobody's paying attention because they're so focused on the obvious plays? That's what I'm looking at here. So the company is D-Wave Quantum, ticker QBTS. And before you're like, oh God, another quantum computing pump, just hold on, because this is different and the difference actually matters. Most quantum computing companies you hear about, they're working on gate model quantum computers. Super complex, need to be colder than outer space. Error rates are a mess, years away from doing anything useful. D-Wave said, forget that. We're building quantum annealers. Completely different approach. And here's the thing. They're already deployed. They're already solving problems right now. Not in a lab, in production for actual customers, paying actual money. And I know quantum annealing sounds boring. It is boring. It's optimization problems, supply chain stuff, logistics, scheduling, not sexy. But you know what? Companies actually need this. Optimization. Every major company has optimization problems they can't solve efficiently. And classical computers kind of suck at these problems. Even AI struggles with certain types of optimization. So what happened in Q4 2025? Let me show you the numbers, because this is where it gets interesting. Revenue came in at 12.3 million, up 94% year over year. 94%. Full year 2025, they did 38.7 million, up 81%. Now, you're probably thinking, okay, but that's tiny revenue. Yeah, it is. But look at the contracts they signed. November. Deal with NTT Docomo. That's one of the biggest telecom companies in Asia. Network optimization using D-Wave system. Commercial deployment, not research. December, expansion with Los Alamos National Laboratory. National security applications, materials science, actual use cases. January, contract with a European aerospace company. Supply chain optimization for manufacturing. Can't say much more because it's confidential, I guess, but it's real. These aren't research partnerships where they study the technology for 3 years. These are, we have a problem, we need it solved, we're paying you to solve it. That's a different thing entirely, and their margins are improving. Q4 gross margin was 62%, up from 54% last year. When margins improve like that, it usually means the technology is moving from experimental to commercial. So here's what I'm trying to figure out. Is this the early stage of quantum computing? Is it actually becoming viable? Or is this just a temporary bump and we go back to quantum is always 5 years away? I don't know. Honestly, I don't know. But the setup is interesting enough that I'm paying attention. Let me walk you through why the timing might matter here, because timing is kind of everything with this stuff. We've got governments treating quantum computing as national security priority. The US allocated over $1 billion for quantum R&D. Not all of that goes to D-Wave, obviously, but some of it does, and because they have working systems. So we've got enterprises realizing classical computers can't solve certain problems efficiently. And when you're a Fortune 500 company losing millions on suboptimal logistics, paying for quantum computing starts looking reasonable. We've got D-Wave offering this as a cloud service. You don't need to buy a quantum computer. You just access it through their Leap platform. That lowers the barrier massively. And we've got actual use cases right now. Volkswagen used them for traffic optimization, Lockheed Martin for aircraft design. These aren't experiments. These are production deployments. So the question is, does this scale? Can they keep growing at 89%? Can they sign more commercial contracts? Can they expand beyond optimization into other problem types? I don't know. But let's talk about the valuation, because this is where I get uncertain. Stock trades at about 8 times forward revenue. Based on 2026 estimates, that's expensive for a company doing less than 40 million in revenue. But here's the context. They're growing at 80+%. Margins are improving. And they're in a market Goldman thinks could hit 100 billion by 2030. If they maintain even half their growth rate, they'll do 70 million in 2026. Maybe 120 in 2027 if the contract momentum continues. Suddenly, you're not paying 8 times revenue. You're paying 4 times forward revenue for a company growing triple digits in a technology that might be approaching an inflection point. That's not crazy expensive. It's just risky, very risky. So let me be clear about the risks, because there are a lot of them. Risk one is the technology risk. What if gate model quantum computers suddenly work and make quantum annealing obsolete? Possible, though they solve different types of problems. More complementary than competitive, probably, but still a risk. Risk two, execution. They need to keep signing contracts. If growth slows, this stock gets destroyed. High growth, high valuation stocks are fragile. When the story breaks, they don't just go down, they collapse. Risk three, competition. IBM, Google, well-funded startups. What if someone builds better quantum annealers? D-Wave's lead isn't permanent. Risk 4, market timing. Broader correction hits, small cap, high growth names get crushed. D-Wave would not be immune. Risk 5, dilution. They're a small company. They might need to raise capital. That means dilution. So these are real concerns. I'm not dismissing them. This is speculative, very speculative. Here's what I keep coming back to. Everyone's focused on classical AI infrastructure, NVIDIA, data centers, all that makes sense. But quantum computing is starting to move from research to commercial. And D-Wave is the only company with deployed systems right now, not in a lab, in production. That positioning might be worth more than the market thinks, or it might be worth nothing if this doesn't scale, 50-50. So how am I thinking about this? Very small position, like 1 to 2% of portfolio max. This is a speculative play, not an investment. You need to size it like something that could go to 0, because it could. If you're more aggressive, maybe 3 to 5%, but only if you really understand the technology and the risks and you're willing to use a stop loss. This is a small position. The thesis is interesting, but I could be completely wrong, and I'd rather miss upside than, blow up on something that's risky. So let me address the obvious question. Quantum computing has been overhyped for 20 years. Why is this time different? Here's what's different. D-Wave isn't promising future capabilities. They're delivering current capabilities. The contracts are for systems that exist and they work. They're not prototypes. Commercial deployments. And quantum annealing isn't solving every problem. It's solving specific optimization problems that matter to enterprises. That's narrower than, quote, quantum computing will change everything, but it's more realistic. So here's my take. High risk, potentially high reward. Technology is real and deployed. Contracts are commercial. Growth is exceptional. Market opportunity could be substantial, but risks are significant. Technology could be superseded. Execution could fail. Competition could intensify. This is not a core holding. This is a small speculation for people who understand the risks. If you're looking at D-Wave, here's what I'd suggest. Start very small. Research quantum annealing, understand what it actually does. Look at the contracts they're announcing and size appropriately for something that could go to zero. Maybe 2% of your portfolio. Small enough that if it goes to zero, doesn't hurt. Large enough that if it works, it's meaningful. That's how I would think about it. You decide what makes sense for you. One last thing on timing. We're at an interesting moment. Technology is moving from research to commercial here. Government funding increasing, enterprise adoption starting. D-Wave has a head start. So if adoption accelerates, next 12 to 24 months could be significant. If it stalls, this trade sideways or down. I don't know which happens, but the setup is interesting enough to watch. So that's the D-Wave situation. Exceptional growth, 94% last quarter. Commercial contracts with real customers, improving margins, technology that's deployed and working. And positioning in quantum computing that nobody else has right now. I don't know if you should buy this. That's your call. But I think it's worth understanding, worth researching, worth considering as a small spec position because quantum computing might actually be happening now, not in 5 years, now. And D-Wave is the only company delivering commercial solutions. It might be worth something, or it might not. We'll find out. Anyway, that's what I've been looking at. If you want more of this, Stocks Community is $25 at stockscommunity.com. Transcript it's at free.stockscommunity.com. It's free. Hit this like button if this is useful, subscribe button to see more, and let me know in the comments what you think. Am I onto something here or completely missing the point? Seriously, let me know. All right, that's it. Good luck out there. Do your own research. This is speculative. Only invest what you can afford to lose. I'm just sharing what I'm seeing. You decide what to do with it.
Sam Putnam.
This is Sam Putnam. This is Sam Putnam.